Western countries are completely broke. Most people know this by now, but at the same time, most people actually don't know just how broke a lot of these countries are. The United States, long seen as the most stable, safe country in the world, a country that is never gonna default on its debt, a place where people have been placing their money in times of strain as a safe haven asset. Well, Moody's has just for the first time in history downgraded the credit rating of the United States, and this follows all of the other credit agencies that have already previously downgraded the US. And when you think about this, the US government can literally print its money, yet still their credit rating is being downgraded. That must mean that things are going pretty badly. But the thing to understand about that is, as Ray Dalio puts it, the real risk of sovereign wealth in the US and by and large in most of the developed countries is much larger than what these credit ratings are showing. And that is what we're going to discuss in this video. All the while, the Congress just passed a bill that, after all the talk about the spending cuts and Doge and all of that, is actually going to massively add to this deficit. The sovereign wealth crisis that is coming is a topic that I haven't touched on much on this channel, but it is probably the most important thing that anyone with any kind of wealth, any kind of income has to be aware of, because this is something that we haven't experienced yet in our lifetimes, but nevertheless it is something that has happened many times before. So in this video I'm going to detail exactly what I am doing to prepare for this sovereign wealth crisis, and I'm going to show you exactly what assets historically are good to hold in times like this and what are not, and what you should be doing to maximally protect not only your wealth but also your freedom, because losing a bit of money is actually the least of your worries. So broadly, this applies to not just the US. Most of these legacy brand countries, European country, UK, Canada, even Japan. I mean, Japan is even worse than a lot of these countries. They have a crazy amount of debt related to their GDP, which has been fine until recently because the interest rates on that debt have been so low. But now, just over the past couple of months, with all the tariff stuff and everything, the interest rates on Japanese debt has been soaring, and there's a lot of people saying that this could be a domino effect. Why? Well, Japan is actually the largest holder of US debt. And what happens if the debt repayments on Japanese debt start rising? Well, they have to start selling a lot of that US debt, a lot of the European debt, in order to pay for that, which is in turn going to lead to even less demand for European and US debt, which is going to lead the yields there to rise, and it's going to lead to their own debt crisis. That is what people are saying. We will see what will happen, but regardless of whether this happens soon or later, bad things will happen. So what will this lead to based on history? Well, when you have a government that has way too much debt, there are mathematically only three things that can happen. Number one, they can magically fix things. They can reduce their spending, they can get their finances in order, and over time pay that debt down. This is simply not going to happen. Why? Because in these countries, there is no political will or incentive by any politician to actually reduce spending. Why? Because for any given politician, it is much easier for them to just increase spending in the short run, give all these benefits to people so people are happy, because the problems of the debt that is taken on is not going to be felt until much later, when the same politicians are no longer in power. This is a massive flaw in democracy that democracies have not been able to figure out yet. These short-term mindsets create these incentives to continuously take on more debt, because no one likes to see cuts. People aren't going to be happy with it. So obviously no politician is going to do that. The second mathematical possibility is that these countries simply default on their debt. This also won't happen. Countries generally do not default on their debt, especially if they're borrowing in their own currency, if they have a widely used currency, because it's pretty catastrophic when a country defaults on its debt. No one's going to lend them money anymore. It's going to lead to a lot of chaos. So almost always, historically, what happens is possibility number three, which is money printing. Unlike individuals like you and me, when governments have debt, they can just create money to pay off that debt. Sounds like a great solution. Obviously, most of us know that obviously going to lead to a lot of second order consequences. But the thing is, the second order consequences of money printing are going to be less understood by people. They're going to be less painful in the moment. And therefore, this is going to be the easiest solution politically that is going to lead to much less backlash than the other two options. So this is why historically, and all of this is detailed, by the way, in this book by Ray Dalio, The Changing World Order, that goes through how the fall of the Dutch Empire, the fall of the British Empire, that essentially followed a lot of the same trajectories as the US Empire right now and the Chinese Empire that is now coming, how all of these things have happened many times in the past for largely the same reasons. He details in that book exactly what happened with the Dutch, with the British. When these empires became overextended, they took on too much debt. Eventually what happened was massive money printing or devaluations. Before, like, money printing was the thing. Essentially what this means is the value of that currency is going to be going down. So this is the thing that is going to happen that you need to understand. The values of currencies have already obviously been declining massively, but it's going to get much worse. So what does this mean for you? It means that if you're holding US dollars, if you're holding euros, if you're holding pounds, if you're holding these currencies from generally indebted countries, you probably want to diversify your assets into either currencies of countries that are not indebted. I'll give you some examples in a moment, or simply real assets like gold, real estate, etc. Because the value of these currencies is going to be destroyed. We don't know if it's going to happen suddenly or gradually, but it is going to happen. So in terms of your wealth, ideally, again, you want to buy things like real estate because it is a real asset with real value that cannot just be printed. Like, you can't just print houses. Gold, historically, again, throughout history, in times like this, when currencies are losing value, wealth generally flows into gold because throughout history, there has been a safe haven asset. If you want to hold currencies, you want to look at countries that don't have these problems. So what are these countries? For example, Switzerland, the Swiss franc is an excellent safe haven asset. Obviously, by the way, this is not financial advice. I have no idea what is going to happen. I'm just some guy talking about the internet. Swiss franc is really good. I'm putting a lot of money there myself right now. The Singaporean dollar is something that I really, really like. Singapore, I mean, if you watch the channel, you know how much I love Singapore. Singapore is, I think, probably one of the best run countries, if you know, the best run country in the entire world. If you look at their finances, you look at their debt, you might seem at first glance that they have a lot of debt because technically their debt to GDP is quite high. But if you look at their debt to asset, it's a whole different story. Singapore can have quite a lot of debt relative to their GDP because they have a massive sovereign wealth fund to support that. So if they ever need to pay off the debt, no problem. They just sell some of the sovereign wealth fund and pay the debt. A very good currency, a strong currency, a stable currency from a stable economy that you can hold. What I have been doing is buying a lot of the Singaporean stock market. You can even open an offshore Singapore bank account if you have, I believe, a minimum of $250,000 to put into the account. But I would say what's even more important than this is that you move yourself out of countries like this. Why is this? Because again, historically, you look at history, you look at, as is detailed again in this book, what happens in countries that are in debt like this. Well, outside of reducing their spending, what they can obviously do is increase their revenue. And for a government, what does that mean? Well, it means increased taxes. And what have we been seeing over the past 10, 20 years? What exactly? Increasing taxes. But it will actually get much worse than this, because once things get very bad, and by the way, they are getting very bad right now in a lot of Western countries, increasing taxes won't really work anymore. In fact, it's going to have the opposite effect because obviously people just leave. We saw this in Norway. They increased the wealth tax. Wealthy people just left. We're seeing it right now in the UK. They're increasing taxes. Wealthy people are just leaving. Wealthy people are leaving all the Western countries. So what is the weapon that they have left? Well, they can't even increase taxes anymore because it's going to lead to reduced revenues. Well, they have to trap people into the system. We're already seeing this right now. Australia is potentially introducing new rules that's going to make it impossible for certain people, most people, especially entrepreneurs, to leave the tax system. A lot of countries already have exit taxes, and the ones that don't are thinking about implementing them. Citizenship-based taxation has been talked about in France. All kinds of things to essentially trap people into the system. Capital controls is going to be a next step. Literal exit bans to make people not be able to leave the tax system or leave with their wealth. They're going to have to do that when things get very, very bad, because massive money printing is going to be only a last resort, and it's going to get to that before they go to the next step. So if you're in one of these indebted Western countries like US, Canada, UK, European countries, things like that, you want to leave before it gets to that. There's so many places you can go. You can go to the UAE. If you're interested, you can book a call down below in the description. You can go to Singapore. You can open a company there, pay not zero taxes, but reasonable taxes. Hong Kong has a great tax structure. A lot of countries in Southeast Asia, like Malaysia, Thailand, have territorial tax system. Philippines as well. There's so many places you can go where you get more value for a much lower price, where you can keep your money. And you need to understand, it's not your responsibility to pay for the debts of an irresponsible government that has been taking on debt for the past 3 decades. It's not your responsibility. You should protect yourself, leave with your money while you still can.